Okay, so option 2 for a form of government failure is negative gearing in the property market. So this is one of the two that hopefully you choose. And basically, most investors in property borrow money to purchase the investment. So negative gearing in investment property occurs when the cost of investing, so essentially what that means is the main cost of interest you pay in your bank account, as well as any maintenance cost on the property, are greater than the revenue received, which you generally receive in rent. So essentially, when you're negative gearing something, it essentially means that every week or every year you're paying more in interest and maintenance costs than you're receiving in rent. The idea of that is that the difference between the two of them, so the difference between what you pay in interest and you receive in rent, essentially, you can deduct off your income per week. So if you make a loss on your rental property every week, they can reduce the amount of tax you pay on your employment income. So, for example, if you take out a loan of $500,000, you pay $600 a week in interest, and $100 in other rates, so your total expenditure per week is $700. You collect $350 revenue in your rent from whoever's living in your house. Therefore, your net difference between the two is $350. So, for example, in this case here, it's a $350 difference. He makes $1,000 per week. If he's negative gearing, he can take that $350 loss on the investment off his income and claim only $650 per week. That he's earning $650 per week. So the idea of that is they can claim more as less in income and therefore pay less income tax. So $1,000 minus $350 is $650. This means instead of paying tax on $1,000 a week, they pay $650 because the interest and other costs on his investment property are higher than the amount he's receiving in rent. The government stops allowing people to claim tax for negative gearing. That means they're no longer allowed to claim this against their income. So they're still to claim to the government that they earn $1,000 a week. This would reduce the demand for houses because they wouldn't get that tax back and should lower housing prices. The most recent proposal is to only allow investors to negatively gear new properties, and we'll talk about why they did that later on. So again, if you are on $500,000 a year, $50,000 a year or $52,000 a year, essentially you would save $350 a week in tax, and then you times that by the tax bracket you're in, which is the 32.5 cents. So of that $350 difference, essentially you'll claim $114 back in tax. So essentially it's only costing you $236 a week to have this property when you deduct, so you start off with the interest you pay, then you minus the rent, and then you minus your tax savings. It's only costing you $236 a week, which is a good thing because house prices have gone up in the past. So investors should pay no tax on rental income if they make a loss.